Hey traders, TG Watkins here. We actually had some really good trades come through and some good guidance from me to the subscribers about the recent market turns. So I wanted to take a minute and actually highlight some of this about what the trading room actually looks like. Now, if you guys aren't in the trading room, or if you've been looking at this and wondering and seeing my newsletters and any videos I put out, remember we're always doing a $7 trial for 30 days. That way you guys can come in and check it out and see what it's like. So you just have to come over to simplertrading.com/Moxie. So what I want to show you in through here, let me get the right cursor color, is this was the 25th. So that was yesterday that I wanted to show you guys. And what in through here I was talking about is that the SPY continues to flag under the hourly 50, and we have the 15-minute 50 below the 200, and Moxies are not strong. So I was talking about bearishness and the market looking down, all this stuff. Now, mind you, this was also just before the market opened, and the market was kind of gapping down a bit. I related this to a GDX example, which I'll get to you guys in just a second. And, I was like, hey, I think we're at least looking for price to go down. This is bearish. We'll see what it's going to happen. And then you can see just after 4 minutes after the market opened, and I was able to see with the internals, I posted and I said, hey, internals are fairly strong to the downside. I said maybe today can break down out of its range after some morning consolidation from the gap down, and basically mentioning that the volume and the advanced decline, all that was muted over the last few days, meaning hey, this is very, very weak. But you can see that right here, if you look at the upper left-hand corner, -5 to 1. That's significant. That's a pretty healthy downdraft as far as moves, and you can see right here on the bottom left, the advanced decline was all the way at the bottom. That usually means a trending day if it's to the downside or if it's at the lows. And that's exactly what we got. And then I came in down here a little bit further at 7:12. Now, mind you, I'm on Pacific time. So, 4 minutes after the market opened and then 45 minutes after the market opened. And I said, yep, the internals were right about this morning weakness. And apparently the morning consolidation meant the 2-minute 8 EMA. And so if you look here, and again, this is everything I'm posting to the Moxie traders and the subscribers in the room. You can see I commented right there that we got that little bit morning consolidation, price flagged sideways into the 2-minute 8 EMA, and then it was just down all day after that. So good guidance, pretty strong. And by the late morning, towards the end of the day, we cashed in one of our positions. It was a leverage inverse ETF of the FANG stocks called FNGD. We got a nice healthy 12% on that one. And then also what I was saying is, I said we could see a bounce or a flag here, so I want to cash in the trade because we have Microsoft and Google earnings. Now, let's take a look at what happened from there. So if we go FNGD, we took this trade. It's a small little trade, but we got in there and we exited there. And thank goodness, because what happened? When Microsoft came out with its earnings, which were up, FNGD went down. So remember, inverse ETF. So this was a great thing that we got out of this thing and captured it just before those earnings. And now that we have Meta up, this thing is probably not working even more. Let me see if we can look at the overnight. Yeah, you can see it's even down even further. So it was a perfect exit of what we did in through there. Now, let me show you GDX that I was referencing to, because this is how the Moxie indicator works, and this is why we have, everybody subscribes to it because they like it. You can see right in through here how price kind of bounced up over the 15-minute 50, but notice that the Moxie indicator was not looking strong. It spread from each other. It was below zero. Like nothing said that this was going to have any strength whatsoever. And so when you see a move like that, it's basically a false move. It's a false long. It's a bounce and a downtrend. And this is a good place to short it. And you can see that since then, GDX has been working its way down, at least to the daily 21. And if we take that and we relate it to the SPY, and I'd been targeting for price to at least go to the daily 21, it went further, so that's fine. We were on the right side. But look what happened here. This is the kind of stuff that I was calling out in the trading room. Said, hey, these were inverse trampoline moves on the 15-minute time frame. Price should not be over the 15-minute 50 if the Moxie indicator is below zero. And you guys can see how that looked exactly like GDX. So for the last week, I was teaching and coaching the Moxie subscribers and traders about what I was seeing on GDX and taking that and relating it to the S&P. And so then we were able to be positioned to take shorts on this, to go long on inverse ETFs, to look at the UVXY, all that kind of stuff. And this is the kind of information and solid guidance that I provide to any of the subscribers out there. So remember, if you guys kind of like what I'm talking about and how I see things and the guidance and the education I give in the trading room, come on in, check it out. Go over here to simplertrading.com/Moxie. Look forward to seeing you there. Thanks again, guys. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.